Welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing, where over here we talk anything finance or anything that's worth talking about. So in this video over here, we're going to be talking about whether we are at the top of the market after seeing a very strong summer rally in big technology and other sectors. It's been a little bit volatile over the last week, so we're going to get more into that, and my general thoughts on the market, what we've done so far, what kind of period we could be entering right now, and where I see us going in the future. So if you haven't already, subscribe to the channel, hit that like button, and let's get started. Alright, so starting off with the Dow Jones Industrial Average, which is an index of 30 prominent companies in the United States that represent the economy, is up 14.5%. We see it had a little bit of a bottoming at the end of January, and then again at the beginning of March, and since then it's been up about 12%. The S&P 500, which is an index that represents the 500 biggest companies in the US, is up 20.5% up to date. And we see again a little bottoming at the end of January, again in March time, and then since then is up about 18%, as well as the NASDAQ 100 index, which represents the 100 biggest companies in the US, except for financial companies. So those big tech companies in the S&P 500 have that much more weighting in the NASDAQ 100. We see a bottoming in March, about March 8th, as well as another one in the middle of May. And since then, the NASDAQ 100 is up about 18.76%, which is quite significant as well. And looking at the candlesticks for the FANG index, which is Facebook, Apple, Amazon, Netflix, and Google, even though I think Microsoft should replace Netflix in this index, but whatever. Every candlestick here represents 1 week, time frame of 1 week. So we see ever since the end of May, beginning of June, a huge leg higher. The index going from about 4,700 all the way up to 5,400, and then a little bit of sideways action for about 5 weeks or so, and then another leg higher into the beginning of September. And then right now, we're this red candle over here looks pretty ugly. It lines up perfectly with the trend line I had drawn from a few weeks ago, maybe a month ago or so, that connects from the top of the beginning of the correction of last year in September of 2020. So again, it could be an indication for things to come, but maybe we find support around this trend line over here. If not, then it would be this 20 exponential moving average. And if we see more weakness, potentially at this trend line over here at about 4,900, 5,000, and if not, and if we see even more extreme weakness, which is not guaranteed or likely, but you never know, maybe even at this 50 exponential moving average. And taking a look again at the Dow Jones Industrial Average, the DIA ETF, except for in candlestick form, I'll always prefer a candlestick chart over a line chart any day, as it gives you so much more information on the price action, as well as volume and other indicators. So we see on Friday, September 10th, the DIA opened underneath the 20 EMA, it closed underneath the 50 EMA, and we see the last time we had weakness back in August, we opened up at the same level that we closed on Friday. Last time we found support on the 50 EMA, and the last few times we found weakness as well. We broke the 50, we broke the 50, we found support underneath, and then we climbed back up afterwards. So using that as reference, that might happen again. If it does, then we might see weakness up until maybe 345, 344. Maybe we'll find buying pressure over there. Not for sure, but that is a scenario. Looking at the SPY, again, the daily, we broke underneath and closed under the 20 EMA. The last few times that had happened, we found support just above the 50 EMA. So again, using a pattern, taking note, that might happen again. If it doesn't, then all bets are off. Maybe we go down to maybe 435. 430 would be the more, extreme weakness kind of thing. That would give us about 430 divide by 445 minus 1. That would be another about roughly 3-4% more weakness. So it's not too much, not unheard of. Anything can happen, of course, but just preparing ourselves for what may happen, as well as looking at the NASDAQ 100, the QQQ. I've drawn several different channels over here. So we're approaching, again, the top of those many channels, stretching back to, again, the beginning of the correction from last September, and then the beginning of, or the middle of February of this year, and then again we're reaching that top channel again. We could fall all the way down to maybe the 20 EMA. If we break the 20 as well, maybe we go down to the 50, and then if we have even more weakness, maybe we go down to these bottom channels again, maybe around the 350 level. Again, anything could happen, but preparing ourselves for what may happen. Taking a look at the Russell 2000, the ETF IWM, it had a crazy run-up at the end of last year in November, as the rest of the market did, all the way up until about February time, where it lost its momentum. It reached a higher high in March, and we tested that price a few more times, but it found supply again. It's created a pretty large channel between the 210 mark and just over 230, about 232 or so. And if you've wanted to buy low, sell high, this has been an excellent ETF. The volatility, you could have profited off of it. From an investment standpoint, it's just been trading in the channel, just biding its time for now. And taking a look at the Yardeni Research forward PE ratios for the S&P indexes. Firstly, we have the S&P 500 large caps, currently sitting at a forward PE ratio of 21.2, which is historically high, dating back to the early 2000s, which brings us back to the tech and telecom bubble bust, which was not a good time for stock investors. So that is something to take into consideration, take note of when investing in the large caps right now. Ever since the recovery from last year, we are trading at elevated levels when it comes to forward PE ratios. Going to the S&P 400 mid caps, we're at 16.8, which is, historically on average for where we've been over the last 20 years. And then when we're looking at the small caps, again, historically average, maybe a little bit below the average level. But what you do want to take into consideration is the large caps right now and how they are historically much higher than average. Not so bad when it comes to the mid caps and the small caps, but again, take into consideration, take note when investing in large caps or trading them. Throwing all this information at you guys, how can we use it, digest it, and make good decisions in the market moving forward? If you're investing, throwing your paycheck in every so often into an ETF, index fund, or stocks in general, use this as an opportunity if we do continue seeing more weakness to average down on your positions for the long term. Now, when it comes to specific stock picking, it is a stock picker's market, as it has been for a while now, and I think it'll continue to be so. So be very selective with what you are choosing to invest in or trade. Specifically when it comes to big tech, for instance, I feel like a lot of people are using those big tech companies as a flight to safety because they don't really know where else to go, whereas the valuation may not be in your favor. So be very cautiously optimistic when buying big tech. But again, when it comes to small caps and mid caps, again, be very selective, but there are opportunities out there, and I'm waiting for more weakness for those broader, bigger companies to, give me something I like a little bit more to nibble at. But right now, again, I can't pull the trigger just yet, but watching to see what happens, not panicking, not getting too happy, staying in check, and then seeing what happens from there. Otherwise, that's the end of my video. Thank you very much for watching, everyone. If you haven't already, please subscribe to the channel, hit that like button, and we'll continue making videos. And we're going to be talking about options, stocks, anything to do with finance. Let me know your questions, guys. If anything, give me your comments, your feedback, and we'll see you guys in the next one.